Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, May 20th, 2013. This is brought to you by Triton Wave Consulting, which is an early warning market timing indicator that works in all time frames in all markets. I'm going to talk a little bit about gold today also. I usually do a separate video for my gold clients, but tonight I think it's important enough that you understand on a big picture what's happening to gold and what's happening to the dollar. But first, let's take a look at the S&Ps. Oh, hang on one second. I forgot I am obliged to show you this statement of disclaimer. Oh, okay, now we're all set. All right, I'm looking at the weekly S&Ps. So obviously, if we look and see what's going on here, it looks like the only game in town. I mean, this is like the best stock market anywhere in the world that I'm familiar with. T1 on this side did not even touch below zero here, and it just kept on going straight up, and it still keeps going straight up. And even if it comes down 50 points, it's still on it, and it hits the 8-period moving average, it's still going straight up. So the question is, where is it going from here? And there are possibilities that if this just gets completely carried away, that let's put a fib retracement on this, that this already took out the peak from March 2000 and September 2007. So if we put a Fibonacci extension on here of the 1272, and we go from the peak, this peak right here in October of 2007 down to this trough right here and draw that up, we get a potential run to 1818. I'm not saying it's going to happen. That's a long way off from here. 155 points on the S&P. Anything's possible. But rather than take the risk of this maybe coming down and this being actually a let me erase this for a second. This could actually be a, you know, like this is the shoulder and this is now the head, and the shoulder coming back down here. We don't know that yet, but actually the shoulder would have to come down to here, which makes that 13, which make it like 350 points away on the S&P. And since it's spiked up so much, it wouldn't be surprised if it spiked down. So rather than take a chance on nibbling at another 5 or 10%, I like looking at the put side of stocks that are weak. And so one of the things, let me show you just on the 21 what this looks like. This is a 21-minute. Let me hang on one second. I don't think I have that just right. No, I did have it right. Let's put this time frame on 24 hours, and you can see if you're day trading this, it actually works out pretty sweet. Right here, when it went sideways to down, this was like 8 o'clock at night. These are the futures, the ES, the E-mini futures on the Globex price. So when this is below zero, you want to kind of avoid it, and all you're avoiding is this sideways chop for a day and a half. And then it went above zero right here, and you pretty much caught all of Friday, except that you would have to get it at 3 o'clock in the morning, because that's when that price took off. So you have to have eyes in the back of your head, or just like to stay up a lot at night in order to catch these moves, because a lot of them are starting to happen with the Asia markets and the and the European markets. And this you cut a nice draft up of, 15 points. All right. I wanted to show you something else. Okay, now that we know that the stock market is going up because it's the only game in town, I wanted to take a look at something else, and that is the dollar. This is a weekly chart of the dollar. If you want to look at this, this is on tradingview.com. You don't even need to sign in. You don't even need an account. You can just click this little button over here, and it asks you to sign in with LinkedIn or Twitter. And you can do that, or you can sign up here. It's all free, but it's really fantastic. It saves a lot of exchange fees if you're just following it but not trading it. So we're looking at a weekly chart here, and you see these peaks right here back in 2009 and 2010 in the dollar, and we have just taken out this high right here with the close last week. So the obvious target is 88 to 89 right up here. Well, it's actually probably going to be a little bit quicker, like right in this area. Let me make that a little bit darker so you can see it. Let's do this in cyan. Okay, so that's probably going to be the target up there. All right. So if you're a student of economics, you know that when the dollar goes down, it's inflationary. When the dollar goes up, it's deflationary. So what happens in a deflationary economy? Or what happens when the dollar goes up? When the dollar goes up like this, basically when it starts moving up like this to this target, then goods and services that are exported to Europe become more expensive. So Europeans buy less, and I think I mentioned in last Thursday's video that probably like 12 to 15, maybe even 20% of the international companies who are based in the United States who do business overseas depend on a weaker dollar against other currencies, and when a stronger dollar comes in, their goods and services won't be purchased, which will bring down the revenue and the tax base of everything in this country. So one of the sidebars to this is that I think one of the reasons why the Fed is the Fed is easing up on is thinking of easing up on QE3 because our economy is doing well, or it's not really doing well, but it's doing better. So they're looking for an exit point. But in fact, if the dollar gets too strong and it indeed becomes the only game in town, like the stock market is today, the dollar goes up. The dollar goes up, and at the same time, the stock market comes down. So way back here, dollar going down, 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 all the way into 2008, stock market went up. Dollar going up, stock market went down. It was almost like this was the crash, then it came down again, then it came up again. But the idea is that they do not work in parallel, they work in opposites. So this is the stock market coming down, this is the dollar going up, this is less corporate revenues coming in here, less sales overseas, and what we end up with is fewer dollars coming into the treasury to buy and sustain the QE infinity that's going on. So it may not be that they withdraw because the market is doing, the economy is doing well. They may withdraw because they just don't have enough funds to buy it with. So along with that, let's take a look at and see what's happening worldwide to gold, because I said that this is, I'm going to look at gold here. Let me see where I have gold. Gold. Hang on one second. Let me bring up gold. Okay, so this is a weekly chart of gold. As gold as I said before, as the dollar goes up, that's deflationary, and if it's deflationary, then what's going to happen is it's going to drag gold down. Now, if you're one of these long-term holders and you want to short gold up here or short gold down here and just wait, that's fine. But if you're a trader, this is what I do for clients. I put them in positions, and I will show you what we did last week. That oftentimes when you get into a position like on a let's do a day trade. Well, I'll show you in a few minutes, but just keep that in mind. All right, so let me see what we have here. I wanted to show you the Aussie yen. Obviously, let's get a daily chart here. This is the Aussie yen. Let me just show you what the dollar is doing by itself. It's going straight up. This is on a daily basis. The yen is crashing, and the euro is going down. Euro goes down, stocks go down. So it's interesting that the central banks in the last year and a half I think have bought 550 metric tons of let me see here. I have an article here from Infinity Futures. I want them to think. Okay, right here. Gold combined reserves held by central banks have risen to an 8-year high as nations from Russia to Kazakhstan to Mongolia expanded holdings. The International Monetary Fund, this according to the International Monetary Fund, 534 metric tons were sold last year, the most since 1964, and they may add another 550 tons. So as gold is going up, they look great, and they've been buying it all the way up since, like 300, 400, 500. In a panic, they don't care if it's selling for 1,700. They'll buy it and buy it and buy it. However, on the reverse side, when it starts dropping, do they dump it, or do they rationalize their position that it's going to come back, because if we have a falling economy, then it's just going to go through the roof? And that's the question. Are we going to have a depression, or are we going to have total inflationary runaway? Neither one of those scenarios is really good. One's going to send gold straight up, one's going to send gold straight down. So right now, I think the dollar looks like it's heading to a new peak, and I also think, let me get the dollar in here for a second. Dollar, this is like the last week's action in dollars. It's just straight up, and you can see what it's done in weeks past. Even on a daily chart, this is back in this is daily. Okay, I'm sorry, this is back in August. But you can see it, like once it starts its run, bing, and it's probably, like back up to here. All right, so let's take a look at gold. And gold looks like this is a daily chart of 24-hour gold, Globex gold. And we have a bottom, back in whatever day this was, April 16th of about 1320. Okay, so it's kind of a given that it's going to try to hit 1320. What happens after 1320? I will know when the waves tell me what to do. And let me show you exactly what I mean. I am following, first of all, I am following the 21. First of all, let me tell you what I did for my clients last week. We caught from, let me see, hang on one second here. Okay, so last Thursday night, it was late at night. And I got my guys into gold back at 1385 back in here, right when it hit this number here. And I saw that these waves, this is the 21-minute Globex price, 0 to 0. And when I saw it moving down here, and I saw the waves moving down, then I knew that they were going to crack below here because the daily was already below 0, and it was just a matter of time. So what happened was this rolled into this, rolled into this, and this was already down, so I knew that it was going to keep on rolling over. So that's what I bring to the table. My clients made 30 points in less than 24 hours. So it was a very, very nice way to end the weekend. And they didn't hold it over the weekend because I wasn't sure what was going to happen to the dollar over the weekend, whether it would spike or go down. And the dollar actually started off, I think the dollar started off with a spike. Let me see the Aussie. Let me see it against the euro on a 15-minute chart. Hang on one second. All right, so this is the spike down. This was a spike down on the dollar because this I'm seeing. Wait a minute. This spike down in the euro, so the dollar was up here, and now the dollar's down a little bit. So you never know what's going to happen overnight with central banks. So we got out of it at the close or just before the close on Friday. So again, these are the Triton waves that I use. I like the on T3 on the 15. This is a 1597 tick chart. This when T1 goes below 0, it's right about here at about 1460. Comes back up again right in here. And then when it starts getting a little bit choppy and you can't read it, you drop to the next level and you start reading those. When that gets choppy, you go to the next level. So far, this next level T3 has been reading it very, very nicely. And this basically stayed down below 0, and we took it all the way down to here. All right, let's look at something else. Let's look at Apple. And the reason I bring up Apple is because instead of taking a chance that you might make, as I said before, that you might make the extra 5 or 10% in your portfolio. I already think the market's going to go down, so I'm not waiting. I'm looking for stocks that I think are going to do the same thing. All right, so right now I see I like playing Apple because Apple hit its. This is the daily chart on Apple, and it hit a peak after this pretty good run from about 380. I think that was 385, 382, all the way back to 458 or higher, 460. And then it started rolling over. If you can see, it just had this hint of rolling over again like this. And since T4 and T5 are below 0, and the majority of T3 is below 0, I did not like this for the upside anymore. Usually, if these were above 0, I'd say yes, it's going to go up and challenge, and it's going to hit 491. But when this started having a little bit difficulty coming in here, I decided that this was a good short right in here, right about at 450, 452. And the reason was that I was looking also at the, whoops, let's do let's look at 610, a 610 tick chart on this to see if that works. All right, that's not going to work as well. Let's go to the 987. Okay, so here's the 987 on. Here's the 987 tick chart on Apple and you can see the best representative one here is right here, T3, bing, at 9:01 on whatever date that was. This is like 3 or 4 days ago. At 450, and then you cover it right here. Now you're going to take a little heat because it went up and then it went down against you. But as long as this wave is above zero, you're okay. And this is what I tell clients. I don't sell these or lease them yet, but I tell them when to get in, when to get out. So this became a sell again right in here at about 4:35 or 4:36. So this is what I'm looking at. This is what I'm looking at when I'm advising people to do. So if we look at the let me see. I guess that's all I wanted to look at. And actually, now that I'm looking at this, it does, even though this wave is below zero at minus, at minus 0.12, it's really slightly below zero, and this is actually really possible that this could try to kick up just a little bit up to, at least 4 or 5 points on the opening, and we'll see what happens after that. So that's all I have. Have a great rest of the evening and enjoy the rest of the weekend. I will see you at the next update. Again, if you want to become an exclusive client of Triton Wave Consulting, please email me at tritonwaveguy@gmail.com, and I will be happy to answer any of your questions and happy to have you as a client. And again, have a good weekend and see you. Good luck trading.